Hi there, guys, and welcome to this week's edition of the Wise Crypto Sunday Special with me, your host, Chris Coney. So today's topic is play-to-earn blockchain games, and with me once again is the lovely Marija Matic. Marija, welcome back to the Sunday Special.
Thanks for having me, Chris.
Thank you for coming to talk to us about this, or discuss rather, this topical topic. I always say that. So let's start off with the most obvious point here that investors might have. So the idea of play-to-earn blockchain games is exactly what it sounds like. You get paid to play. So instead of me being the player and I pay for the game and then get to play, it's the other way around. I play and then I get paid for it. So that completely flips the model on its head. So how is this even possible to get paid to play games? Like, can you give us a general answer to that question? How is this even possible?
Well, the most general answer would be that in crypto world, in the decentralized world, the attention, the marketers and creators will have to pay for the attention.
Right.
And but also creators will have to be paid. For example, we have social networks, the centralized social networks that are cutting out the middleman, which is taking money from the advertising company. Companies are advertising themselves, like, for example, Zuckerberg.
Mm-hmm.
You're cutting out the middleman in order to earn money for yourself, because you are a creator, you're creating content on the social network. The future of metaverses and the games will be that the creation of games within the metaverses will be decentralized, and people who are creating these worlds will need to earn money for that, for enriching this world. And so with the NFTs and the crypto, it became possible to earn money inside metaverses and games.
Right, I'm with you. So where does the money come from? It comes from, if it's an in-game economy, then it comes from the people consuming the value, and it goes to the people providing the value. So in the way you just described, if you're a creator, I'm going to go back to the olden days in Second Life, when someone had there were 3D artists, and they knew how to do 3D modeling. So they made virtual shoes, and they had a shoe shop. So they were using their talent to create these virtual shoes, putting a texture on them, and then displaying them in the store. And then other Second Life characters would come along and pay Linden dollars at the time. I think they're probably still around, to buy those shoes. But that's not necessarily play to earn. That's almost like create and sell, right? Whereas in some of these play to earn blockchain games, doesn't the money come from like token inflation?
There are many ways to earn money within play to earn games. It depends what kind of game it is. You can, for example, build a character, an avatar, which or a digital pet or something like that, which has a certain set of skills, and by enriching the skills of the avatar that you're creating, you're raising the value of that avatar or NFT item. And you can basically, or for example, if it's a land within the metaverse, you can increase the value of that land by building something useful on it, or something like that. So
Okay.
you can definitely raise the value of the items that you own within the metaverse or the game, and once you sell it, of course, you can earn. But there are so many different examples. It depends. Now, in the early days, we have DAOs of the games, the treasuries, which are in a way rewarding users, even though they may not. They're rewarding users even though they may not deserve certain kind of rewards. But that's how it works in crypto. In the beginning, you get these stimulus to continue earning the game money on this land, even though right now those games where the land has been purchased are not really fully developed. There's no real economy there. But so yeah, you have these initial rewards, but for example, people are paying to get involved in the race, and then the winners take that money as a prize. So there is, the money is flowing from different people inside within the game, and these will be huge economies, and there'll be so many ways to earn that it's just incredible and mind-blowing.
I'm with you. So one thing I thought in your first example there is when you said you play the game and build up your avatar, that's just like playing a traditional, like massive multiplayer online game like, say, Diablo or World of Warcraft. So you start off with a very basic character, and then you basically have to put the time in to log hours and do quests and level up, find gold, find rare items, and purely through hard work, you build a more powerful character. Now, someone might want to buy that character off you who's just getting into the game, and kind of like mobile games that allow you to pay to kind of get extra lives and basically cheat, right? So you don't have to put the hard work in. Someone might want to buy my character that I've been building for a year. Great. So I could, if it was an NFT, I could just sell that character, and someone brand new to the game could basically leapfrog a year's worth of progress. But then basically I've been paid for my time and hard work. So when I thought about it like that, that's much more like the real world economy. So maybe play to earn it kind of misdirects the understanding, because if you just stop thinking about it like a game and stop saying the word play, well, it's almost like, because it's play to earn, it's more like work to earn, right? So in the way I just described in, say, World of Warcraft, you're still doing work. The fact that we call that virtual world a game, that kind of, I think that causes people not to take it seriously as an economy, whereas it's deadly serious. It's an actual economy, right? So this is where the metaverse and the three-dimensional physical world are going to blur, because if you get a job or work in the metaverse, you're literally going to put your VR headset on and say, I'm going to work. And you go into the metaverse and do your work. You'd spend your time creating value in whatever way that is defined by the buyers, create the value, and then when you finish your day's work or whatever, you take the headset off and go and have dinner, right? So it's not really play to earn, it's work to earn. So that's sort of shifted my mindset thanks to you just now and what you said just then. So that's clarified it for me, and hopefully the way I've just said it will help it click into place in the mind of investors viewing today's show. So what other questions might I have here? You've already covered this one, which is how has gaming managed to transition to play to earn? And I've written in the notes that I suspect one of the parties in the old model are having their share of profits reduced. And that is true. So like the BAT token, the basic attention token, that's transforming advertising. So you download the Brave browser, you turn on Brave ads, and then every time a little ad pops up, you receive a fraction of a basic attention token, right? And that's coming from advertisers who are paying for your attention. So that's another way you just said we can monetize these virtual. I'm going to stop calling them in-game, because I think game is the word that's messing it up. These virtual economies. So yeah, again, you could monetize it through virtual billboards, and all the rules of the physical world still apply. Wherever human attention is, advertisers are going to want to buy that attention, whether to direct it into the physical world purchase or more virtual world purchases. So back to my point here, at the moment you have most of the game developers and platforms taking a lot of the revenue, whereas we're decentralizing it, taking out a lot of the middlemen. So that frees up more revenue for people providing the kind of grassroots value inside these economies, right? So that kind of answers that one. Here's another question. How do the game developers, no, I've said it again, how do the developers of these virtual worlds fund themselves? Do we know that? Are there different models for that?
Well, they're mostly through seed sales, private sales, and public sales of their tokens. That's how they fund the development, and usually their allocation, which is preset, it's vested for a certain period of time, and then it gets gradually released, linearly released, maybe on a monthly level after, for example, being locked for a year or two. But then you have different other funds like the money, the supply of the token gets allocated. There are different allocations. So you have the team allocation. You also have a treasury one, or the one for marketing, or different things. And all these allocations are publicly announced, and this information is available, and also the vesting schedules for each. So yeah, like the long-term development has been thought through with most of these games.
Okay, so I've seen that most of the developers, they'll put a pie chart on the website and it'll slice it up into, original. I suppose the original investors who are risking their capital to fund the development, well, they are taking the biggest risk, right? Because
right now you don't really have to risk much, because there's so much money in crypto, and so many VCs they want to fund the ideas. So it's not like the old days when you had to invest all that you have to kickstart the idea. Right now, only with the idea and the nice background, like you've been working as a product lead of some large game studio or something, you can kickstart the idea only with the idea. So it's not like that, and they're not risking that. They're risking maybe prison. I mean, regulatory issues are the biggest issue for founders of any crypto project. So this is the largest risk, of course, and of course safety measures taken to when it comes to code and audit and things like that. So these are the cybersecurity. These are the tricky questions. Absolutely. And also not raising enough money. There is a risk that you're not going to raise enough money, which is depending how ambitious your project is, which is not going to be enough maybe for,
to even finish the development.
To finish the development. Sure. This is also risky for the investors, and those are kind of things that are risky.
Totally with you. So how does the founding company stay profitable though? Because they're not actually charging for the games in the traditional way. Like you go to the store, you pay $50, you come home with a disc, and that's it. That's what you get. So to access most of these games, they're free to access, right? So that's fine. You get seed capital, or you do a token sale, you get a bunch of money in, and hopefully it covers the development cost, and you launch the thing, right? And great. And hopefully you bootstrap an economy, and the token starts trading, and boom, it gets a market cap. Lovely. But unless you've got inflation of the token, say you've got a fixed supply of 20 million tokens in your I nearly said that again, in your virtual economy, what happens when the allocation to the developers runs out? Now, I think I've already answered that in my head just now. Say I allocate 1 million tokens to myself as the developer. Well, you would hope or aim for the value of those tokens to continually increase as the game gets more popular, almost to provide you with an infinite supply of cash. So on day one, those 1 million tokens might be worth $1 each. It's $1 million. But if as you spend it carefully and slowly, if the token value keeps doubling because the game becomes popular, that stash becomes worth 5, 10, 20 million, right? And then you keep reinvesting, and I suppose that would provide a way to fund the project long term without actually charging anyone any money for it. Yeah. So there we go.
Well, you're right now you're talking about the fungible token, like the governance token of the game.
Exactly.
But there are NFTs as well, which are very important as well. Like you can, as a creator, founder, the point is like if you founded the project, it doesn't mean that you're gonna end up doing it in a couple of years. Maybe some other team will take over, because the aim of these games is to become decentralized through the DAO. Not all, of course, but with the DAO, with the common treasury fund, voters, token holders can vote on which team will receive the grant in the future to develop this or that update or something. But also, like, how would you enrich the DAO? How would the DAO make money? For example, you can put like NFT sales of lands, virtual lands. You can set a percentage for all the resales, the percentage of all the resales of that land within the metaverse.
That's like a transaction tax.
Can go to but that's the creators of NFTs are usually putting this percentage, giving to themselves royalties,
That's the one, yeah.
From each resale. And so you can, for example, do that. So initial sale of NFT land goes to DAO, to treasury. Also each subsequent resale, the percentage of goes to DAO. So there are so many ways to earn within the metaverse for the creators.
That makes perfect sense. That does make perfect sense.
Yeah,
I like that.
And of course, the governance token itself is a huge source of income, especially for the founding fathers of the game.
Absolutely. And again, if the game continues to grow, the treasury gets more richer and so on, right? So that's good, as long as it's governed well, and it gives the players the people what they want. Then it should, if they reinvest wisely, it should just grow and grow and grow. So that's cool. So examples of some popular current play-to-earn blockchain games. I found this site, playtoearn.net, which has a vast amount of information about, most popular games right now and so on. And they even categorize it into subcategories within the whole play-to-earn sector. So they don't all use the same economic model either. So things like, we just covered a lot of them, paying amount of inflation or whatever. Is Axie Infinity is the one that keeps getting bounded around, and I've looked at that a couple of times, but that seems a lot more like a mobile phone type casual game than a World of Warcraft type quest game, right? So is there any particular reason why Axie Infinity is doing so well?
That's a very tricky question. Well, I guess, many people have heard that you can earn, a lot of money. When I say many people, I'm talking about the eastern part of the world, and for example, some parts of Asia, and where the wages are lower than USA, and the earnings which one player can make are really a lot. I don't know how much they are right now, but a few months ago they were, as you could earn maybe $800 per month, which is a lot.
Yeah, absolutely. If you've got time, and that's the point, isn't it? If you're in that was in the Philippines, wasn't it, where it suddenly became popular to begin with, and if you're in a country that lacks a lot of employment opportunities but has internet access, and you have this virtual economy like, say, Axie Infinity, where you can earn, well, let's say it was $400 a month, who cares? It's there, right? You can become sort of virtually self-employed within these virtual worlds. And if the money dries up in that one, you go and work in another one, right? It's really flattening the economy and making opportunity available to anyone with an internet connection, really. That's really talk about closing the wealth gap. It's access to the opportunities is what's being given to these developing countries, right? So I think I eventually figured out what the name of this game is. I wrote down in the notes that unreleased space game everyone is hyped about, and then I think that's Star Atlas. Is that the one? Do you know this one?
Yes.
So
it's very hyped, yeah.
So that's the reason that one's hyped. Is what does it remind me of? It kind of reminds me of Cardano in a way, that it's supposedly highly sophisticated, kind of complex, and a lot of work has gone into it, and therefore there are very high expectations of it. But as far as I know, it's not been released yet. Do you know anything more about that? Like when it's going to be released? Do you know?
I'm not sure exactly the date, but yeah, a lot is expected of Star Atlas, and I really think it's going to be a good game.
Do they
I wouldn't. Yes.
They have a token already that you can buy.
Yes.
Oh, really? I did not know that. Okay, interesting. That is interesting to know. Some of my other favorite ones. Do you know? Have you seen Zed Run?
Yes.
Yeah. So that's like you earn by winning money off other players, which means the money comes from outside the game. So that's virtual horse racing, the Zed Run, right? And I suppose you said that earlier on about. It reminds me of my friend Mark he's into pigeon racing, right? So you breed pigeons and you know what I'm saying. So that's how those races work. They are traditional like sweepstakes that everyone pays an entry fee to get into the race, and then the money is pooled. Some of it's given to the organizer, and then the rest of it is divided into prize money based on first, second, third, etc. Right? So that's a very simple way of playing to earn. And you were saying that is one model you can adopt in, say, a virtual racing game. So that's kind of how Zed Run works, where there are NFT horses. That's a whole nother thing. You can buy and sell them, and the developers obviously get the royalties when they get transferred ownership. There are stud fees if you breed the horse, but then you can just be a gambler if you like. You can go onto the site, place a bet on the horse, look at its track record, and if that wins, you win. And even the owner of the horse wins money if it wins, right? So that's kind of a very interesting one. I even said to Mark, I'm like, dude, you should get into this. Like, you know so much about pigeon racing. Why not just do what Zed Run have done with virtual pigeons, right? It would be amazing. Because the problem is right now in that sport is there's not all the birds return because they get eaten by birds of prey on the way. So with a virtual one, that wouldn't happen, or would it? You could build that into the game, maybe. Don't know. Just saying.
Yeah. Well, the thing is, like for example, Zed Run, you have horses which are $100,000 or worth, like $100,000, like normal racing horses in the real world. So generally, you have. In Cryptopia, you have shops that are worth a lot, couple of thousand, hundreds of thousands of dollars. Why is this so? Because you can earn with these shops potentially in the future the same way you could earn with the physical shops, because you rent them out to interested companies, and you have so many companies within virtual worlds that are entering the virtual worlds. You have Adidas, you have Nike, Microsoft is creating their own metaverse. So many of the companies and the fashion companies are going to be the next. They're going to be creating virtual fashion shows, displays of new sneakers or whatever, and within the virtual world, the possibilities are limitless, and also the eyeballs and the number of people that can attend these virtual events is much higher, and you're not restricted by the physical space.
Yeah, totally.
And location.
That is a good one.
Because you have all these world companies, very important global companies that want a shop there. like you would have on Manhattan or somewhere else in the physical world. But in the virtual world, of course, you're going to charge them the same. I mean, they're going to have maybe even higher revenue from being present in the virtual world than they have in the physical shops that are very limited by location scope.
Yes, but it's the same with what we said earlier about attention. So why on earth is, I don't know, Times Square real estate so bloody expensive? Well, because there's a lot of people walking past, right? So similarly, and I said this in an episode I did about metaverse investing. So you've got several logical levels. You've got, like, let's assume Polygon Network becomes like the place to be in terms of building your virtual world, and then you say you've got a world within. Oh, let's use Polkadot, right? Because Polkadot, and you've got Polka City within that, and then within the Polka City, you'll have very key the center of town, wherever that happens to be. Now that's defined by the people's movements. If they start hanging out in this district over here a lot, then they're going to spend their money there, and that's going to drive real estate prices. And then if a different part of town gets hot, just like in the real world, right? So if I'm a say a virtual real estate investor, my job is to guess which cities are going to be hot and which parts of the cities are going to be hot. Because if I buy the real estate early, boom, right?
Exactly. That's very impressive. And for example, you mentioned Polka City. Like in Polka City, okay, Polka City is not on Polkadot, but Polka City generally,
is it not?
They don't know.
Okay.
They don't just rent land, but they also rent gas stations, cars. You can own a car and rent it out for people who want to drive around and maybe race around or whatever. And there, of course, they're gonna run out of gas, so they will have to charge to put some gas in, and the people who own a charging station or a gas station will earn some money from that, and maybe they will want to rent a yacht or something in the metaverse, but the owners of the yacht are certain people. And now it looks very crazy. Like when you're thinking about, let's say, Polka City or any other metaverse, you're like, okay, I would love to buy some asset in this metaverse early on, but which one? What like, should I buy a concert hall? Will this project concentrate on music events? Because you already had, like, I don't remember, Ariana Grande doing a concert within some games, traditional games. So will they concentrate on music events? Will they concentrate on sport events? Maybe I should buy a stadium in fact, or maybe I should buy the cars, because maybe people will want to race like San Andreas game. And because people can do so many things within these metaverses, you kind of have to guess. And it's right now it's more of a guessing game, but at the same time, these assets are not cheap. Even in these early days, they're not so cheap. But of course, they're depending on the success. If these metaverses, or as you say, the part of the town, the part of the land, if it's or the floor on the Cryptopia building, if it succeeds, then you have a jackpot probably. Like if you go to Cryptopia building, you're like, okay, what should I do? Should I buy on the 6th floor where the events are going to take place, like round tables, conferences, where people will be incentivized to attend by the organizers, or like auditorium, or should I go for the top floor where the gaming events will be held, like gaming competitions and everything? Or should I go for the 1st floor, or should I look where the companies like Binance or Cointelegraph, CoinDesk, which floor are they opening their shops in? It's just like there's so many possibilities, and depending on how skillful you are, probably within the real world, maybe you can kind of envision and have more think it's true, you know. But you also have like inside of these games, you have in these metaverses, you have spaces where developers, third-party developers, will be creating some social challenges, social games, so many different things that may attract people as well. So it's very difficult because you have so many worlds, and you have these space worlds, like should I buy a planet or a spaceship? Or you have these towns. Should I buy a town? Land within a town, or you have a building. So many things going on, and it's quite difficult. So it's difficult for an average person who doesn't know much about, who's not in the space. It's very difficult to, he cannot just come and say, hey, I just want to get involved. No, you have to go deep into that thing if you want to kind of meaningfully get involved early on.
Okay.
Be it, maybe you want to invest in a guild that's already invested in many of these games and metaverses, or they're probably going to be index of different successful games, blockchain games and metaverses at some point. Like, so many things are happening, but maybe for an unskilled investor would be the best to find the way around, or to invest in the large very large, like in top 100.
Mm-hmm. Absolutely. So, I mean, the thing is about principles is they're principles, which means they're universal. It doesn't matter whether we're talking about traditional investing, crypto investing, it doesn't matter. There are certain principles. So, and you just described one, which is there is a spectrum of risk, and you can move that slider up and down, right? So you can stay down the low risk end, but of course, risk and reward are married together. So the least risky thing would be to just say buy Ethereum, right? And that's the broadest investment you could make. That, yeah, fine.
Yeah.
Any growth in the metaverse, Ethereum's going to capture some of that, right? Right. So that's okay. That's the least risky, simplest, but the lowest reward play that you could take. And then, like you say, halfway along that would be these index funds like Yield Guild Games and any others that decide to establish themselves. That's sort of like more sector specific, but not protocol or game specific. So it's medium risk, medium reward. And then right on the risky end is buying a specific piece of real estate in a specific virtual world that you think is going to turn into Times Square, right? And that's obviously massive potential upside, but the chances of picking the right one, it requires a lot of time and a lot of skill. So depending on what type of investor you are, you can sit anywhere along that spectrum and anywhere in between, right? So that's sort of the big takeaway from when there's something like this that's so complex. You think the real world's complex, this is even more so.
Yeah, especially, when you think about the games and everything, sometimes the most stupid looking games, the pixelated ones, which I will never understand, but there's so many people who do understand, they love them. But,
like
it's just like Minecraft.
That blew my mind. Totally blew my mind.
Yeah, that blew my mind as well. So maybe some pixelated game will, become more popular than all these high-tech games, and realistically looking with metaverses with meta-humans, where you can basically scan yourself and have your own avatar, completely realistic within the metaverse. Yeah, this is a new thing. Like you have,
that's interesting.
You have this Chernobyl game, which just announced their first metahumans, NFT metahumans. But you have to go to their studio in order to get scanned completely with so many cameras around you from floor to the top. And in order for them to create an avatar version of you.
A good copy of you, yeah.
A good copy of you, yes.
Not everyone has those machines.
Yes, you have these creator tools as well, which were issued by Epic and some Serbian studio as well. And so this is going to be a thing as well, like very realistic copies of your digital copies of yourself within the metaverses. But as I said, maybe Minecraft like pixelized metaverses are going to become a thing instead of meta humans, or maybe they both are, but we don't know which. It's quite complicated. There's so many projects. They're very early. We are very early. These are all in the very early days. And right now, investors can only position themselves. They can't play yet many of these games. They can maybe buy a land. They can buy a governance token. But this is the future. This is definitely the future.
So do you mean not all these projects have a working product, or what?
Yeah, like you said, Star Atlas or some other games.
Yeah.
They are. If you look at the traditional world, traditional games, you need a couple of years to build a traditional game. It's not different in crypto world. Sure. You just add the element of blockchain within that economy. You create the economy on top of the visually pleasing game.
Yeah, sure. And perhaps in the crypto world, you don't have to do the big 2-year run-up to a full release. You can, when we do this with smart contracts, right, they can launch an alpha version and let people start testing it and then almost like improve it on the fly with real world data rather than like a massive launch after 2 years and it might flop. Whereas if you launch something in its minimum viable product form, you can see if there's a market, you can test it out in the real world, tweak it, see if there's any security holes and all that sort of stuff, and then work with the users to perfect it in that way, right?
Yeah, of course. Like it depends. Like what we've seen with the traditional gaming world, it's quite difficult, especially if you are, if the players are also builders, building something within these games. It's very difficult to update the game and update all the graphics, even the ones which the players have helped build. It's quite difficult, these updates within these virtual worlds so that's why I think these new games and virtual worlds will have to be quite modular and modular, yes. Yeah, sure. And the success will also depend on the different game studios that are building within pieces of different virtual worlds or on some land plot or something.
Sure. So
you have now you have like metaverses that are building different worlds, different games, like where you can you have like a DAO, which is a main DAO, but then you have sub DAOs. So which means these are governing smaller games within. Like, for example, you have universe, then you have galaxies.
Yes.
So you have universe, which is DAO, and then you have sub galaxies, which are sub DAOs, governed as sub DAOs. And within these galaxies, you have worlds or planets or something, So it can all kind of expand very much, but it has to be in a way modular, and the success of each unit doesn't have to they don't have to be connected, the successes of they don't have to be interdependent that much, so they can be own. And we don't know which one. Maybe the Jurassic Park world will be more popular than a steampunk world or opposite, and but we can build both of these inside of some galaxies, worlds, metaverses.
It seems a bit spooky to me. It's almost like how our physical universe was designed. There are certain laws of physics. That's like the universal rules, and then we have different galaxies, but different planets have different gravity and different atmospheres, and therefore different types of life. We already have that in science, like in the physical world. But now you're talking about replicating that in the metaverse. So you could start with a whole new universe with a kind of a universal set of rules that apply to the galaxies and then the solar systems and then the planets. And you might have a Earth-like planet, and then you might have a, little grey alien type planet. But then you can have an entirely different universe with a different set of global rules that apply to all the levels below. And I'm like, Jeepers Creepers, that really is like some of the theories about the physical universe. So that's really where it gets to another note I've made here about the problem with this sector is the same problem I see with all of crypto. When it comes to investing, it's just the risk of complete and utter overwhelm at the number of opportunities. It's infinite. It is by definition infinite, because there is no limit in the digital world.
Yeah. And to add to the complexity, you now have in this virtual world, you have different games being built with their own tokens. So you have a virtual world with their own token, and then the worlds within it or the games within it that are issuing their own token. Mm-hmm. So it becomes more and more complex. And you're going to have some VIP access to some of them. You would need certain NFT for VIP access to something in the virtual world. So it's all quite complex now. Mm-hmm. Until we reach the stage where we start using it. Yes. When you start using it, it will become more flawless, easier to navigate, to understand how it works, why it works like that. And
it'll also be obvious where the big winners are. Like when social networks started becoming a thing, there was loads and loads and loads of them. Right, from Squidoo to MySpace to this to that, and then they've sort of gradually consolidated, specifically because most social networks, they start out like with one type of media, like Twitter was text based and YouTube was video based, and Instagram was photo based, but then as one takes off, the other platforms sort of add that as a feature. So now on YouTube you can add video and images and text and links and all the rest of it. So you can on Twitter, so you can on Facebook. So they've all sort of blurred together. But we know what the major ones are, which is where all the attention is, and that's the network value. So while there's a lot of experimentation right now, same thing will probably happen. 1 or 2 or 3 universes will become the primary, most popular ones where people are spending their time, because that's the ultimate scarcity. While there might be an infinite number of virtual universes in the metaverse, there isn't an infinite amount of human time to spend in all those infinite universes. So some of them are going to have to die and consolidate wherever people are hanging out. So that's ultimately where it's going to go. So it isn't going to be this complex forever. What do you reckon?
Yeah, I agree. And it's like, on Facebook, I don't use Facebook, but I remember like on Facebook, you had these small games that people were playing, some were playing this one, that one. So it would be like that, like socializing in the, some metaverses will be for socializing, focused on socializing. So you would be able to socialize plus play the virtual games around. So not all people will be interested in the same games. So, but as you say, there will be, I really hope that we are not going to have such a huge monopolist like we have now. Like you have Google, you have YouTube, you have Facebook, and I don't know, TikTok. I really hope that it's going to be, but when it comes to socializing, there will probably be a huge network, a huge metaverse, because people go where their friends are, and they're, everyone just, it's like magnetic field, and they just, you can go on some obscure social network, but you don't know anyone there, and you can't really listen, meet your friends there, or listen to or see their updates and what they're doing, their photos. I don't care about the photos of the strangers, So in a way, we will see which one will win over in this social networking, with the social networking element. And I think this will be the glue for all the games and metaverses. So it's quite important which one provides the more the easiest barrier to entry for regular people, like probably the ones which do not need VR glasses or something like that, you know, where you can just enter from your phone and things like that. So with, of course, having more richer experience if you use some gadgets, and we will see. I don't know. Like now you have even the mixed reality ones where you have augmented reality added to the mix with the VR, and it's all quite interesting.
It is. So I made that point in a previous episode about wherever people socialize, right? At the minute, the reason that Facebook is hard to beat or compete with is because that's where all the users are, that people go to Facebook because that's where their friends are, and they go there because that's where they are. So it's very, very hard to compete with that when you've got no users. You have to bootstrap it somehow. So there's no wonder that if Facebook see the trend that people are going to be socializing more and more in the metaverse, they're going to stop socializing on Facebook because they've only got so much time. Back to the ultimate scarcity of human time. So if you start choosing to spend your how long people spend on Facebook, 2 hours a day in the metaverse instead of on Facebook.com, that's a problem for them. They're eventually the revenues are going to shrink. So they need to do something about that, and that's why they're now Meta Platforms Incorporated, right? So we'll see how
people
that goes.
With social networks, people kind of stop socializing in real life, and that happened. I mean, not stopped, but they reduced the time which they, for some increase the level of socializing online with. I mean, that's not necessarily bad because, I mean, you can socialize with your relatives which live across the ocean and some other people that you really like that you may have not known before, with shared interest and everything. Okay. So you may enrich your other experiences. Your experience can be enriched, like maybe your mental stimuli and the conversations that you have may be richer in the online world than in the real world because you're not. Okay, there are benefits. I'm not going to say it's evil thing. Social networks are evil. It's the time, and it's what the progress brought, and there are of course negative things about it. But yeah, virtual worlds are going to be extension of that.
Yeah. Okay. So here's where I want to close it. This last point here.
It's not just going to be for socializing. We're going to spend time there meeting people. Like me and you, we are instead of meeting in a studio and doing this, we will be meeting in a virtual world and doing an interview. Also, you will be trained. Like, for example, you even now have companies that enter that space, like training their workers how to do maybe a line job in a factory.
Or even firefighters and surgeons, and I've seen it. Yeah.
Yeah, you have so many trainings for jobs which are realistic and you can try it out, and so many things will be happening in the virtual world. It's not just going to be socializing or playing games. It can be very, very useful.
Sure. So here's the last point I want to make, which was building on something you just said. So you said, so the social networks are not evil, blah, blah, blah. People are not socializing so much in person anymore. Okay, great. And you said that's just the way it's progressed. But the fundamental question I have, and I think I've got an answer to this, but I'll see what you think. What on earth is powering that trend, though? Because I personally would much rather socialize with you in person. Categorically, no doubt about it whatsoever. I would much rather shake your hand, hug you, right? No doubt about it, right? It's not a substitute in my experience, right? So what?
Absolutely, but we live in different countries.
I know that, but
yeah, like socializing online is better than nothing.
Better than nothing.
or better than the latter, I guess, or I don't
know. Like what human need is being fulfilled by this trend? What's driving it, right? And I'll give you my answer. I think it's easy money. Well, I mean fiat currency, right? This is my summation as quick as I can give you it. I just don't think people have got time anymore, right? We just don't have a lot of time. So the quicker you can do something, the better. So rather than even me driving 30 minutes across town to see a friend, well, isn't it just quicker to walk into the spare bedroom and boot your VR up and right? But why do we have to do that? It's because we haven't got bloody time. Why don't we have bloody time? Because the money is not worth anything anymore, right? So this is back to primarily Bitcoin as hard money, right? Austrian School of Economics. If we can bring sound money back, perhaps once the pendulum swings the other way, we'll not have to work so many hours, and then we'll have time for each other in person. That I hope that goes that way.
Yeah, well, sending letters is inefficient. It's about time, as you say, and efficiency, and
That is the problem, though. That is the problem. I watched a documentary yesterday about algorithms, and the trouble is, if you optimize for efficiency, you basically take out the human element. Humans are not efficient, right? They're not. It's not efficient at all. We're not. We're kind of messy. We're not precise in any way. We're flawed. All the things that makes us human are taken away by efficiency. That's efficiency is for machines, not for human beings. And that's where we're becoming mechanized as a race, right? I don't like it, but it's just my view.
Okay. But still people are trying to be more efficient wherever they can, however they can. So
only because they have to.
But we have to,
exactly.
Because the world is moving so fast that even learning about crypto and the payments with the crypto and all these things, it's about the efficiency. Many people are like, that's how many people got into crypto, because they were unbanked or couldn't, do some remittances or they needed more efficient way to send value. Or, the gamers, they started, selling skins and things for Bitcoin in the early days because it was easier for them. So it's just about the efficiency. People are trying to do things more efficiently. If they don't, they risk being kind of sidetracked.
Yeah, you have to do it.
In with their careers or I don't know, on different fields.
All right, we'll see how it progresses. But for now, Marija, thank you very much for coming on the Sunday special once again.
Thank you. Thank you, Chris.
All right, so that's going to do it for this week's edition of the Wise Crypto Sunday special with Chris and Marija. Until the next one, it's bye for now.